Good morning, everybody. Welcome to the Flow Show. Thursday. We could probably call it Friday because it's a bank holiday tomorrow. So it's Friday for me. I don't know about the rest of you, but yeah, here we go. Long weekend. Can't wait. Nice to get a break. And we welcome back Mr. K-Man, who's been sunning himself in the garden for the last few days. Morning, mate.
Hey, good morning, Ryan. Good morning, everybody. Yeah, happy Thursday and Friday then. And it's bunny hunting season, so wishing everybody a happy Easter already.
Those poor bunnies. I'm not hunting bunnies. I'll hunt some chocolate eggs, but I'm not hunting bunnies, even though I do like a bit of rabbit. Quite nice. But yeah, whatever floats your boat, mate. How you doing anyway?
Yeah, feeling a bit better, mate. Thanks. Let's see how it further develops. A bit of problems in the hip, the back, the knees. When a man gets old, it's not a pretty sight. Yeah, but sitting on the desk helps a little bit, feeling less lonely and keeping the mind busy, keeping the mind off the rest of the problems. So,
Yeah.
and I didn't want to leave you alone for too long, Ryan.
Well, you worried I might get up to some mischief.
Exactly.
You know me too well. You know me too well. Right. Let's get stuck into it. Not an awful lot going on actually, but a few bits and
Ryan,
bobs.
um,
Yeah.
before you continue, you're a little faint, in my opinion. No, and I don't know for the rest of the listeners if you have the same issue, but Ryan coming over a little soft, perhaps.
How's that? Is that better?
A little better, yeah. I guess it's all right.
Yeah, I'm not sure what that is. See, you've come back and broken everything already. So
All right, okay. Derek says it sounds good to him, so all right, we'll go on like this. Perhaps it's my
yeah.
ears as well.
Oh dear me! Don't tell me your ears are gone as well. That's the last thing you need. Right. Okay. So right, as long as you can hear me in one way, shape, or form, that'll do. We've had a PBOC advisor out saying China's economy is still relatively weak and that the economy faces inadequate demand and weak confidence. So there's no real signs of a turnaround yet over there in China, which is keeping pressure on the yuan. That's still looking quite well bid in dollar yuan, as we've seen getting back up. Oh, where are we going now? Creeping back up towards those highs that we had before. So it's I mentioned this was still creeping up. It's not ready to go all the way back down again. We'll have to wait and see if they come out with any more sledgehammers up towards these highs. If they do, that will indicate that they are drawing a bit of a firmer line in the sand on that. We had the summary opinions out from last week's BOJ meeting. Not an awful lot to take from that we didn't already know or haven't already heard. There was one comment, half a comment about policy change. That one member said that the chance of a policy shift causing big market volatility is small, which now we've come over the hill from the BOJ, there hasn't been a lot of market volatility. It hasn't stopped, obviously, the movers and shakers from talking and jawboning about the currency all the time. But dollar yen has not done an awful lot after the big move following the BOJ. We've been stuck in this tight range here, which again suggests that because we've got a lack of volatility, which is one of their key metrics for intervening, the fact that they're still jawboning it quite strongly, again, it's falling into my way of thinking that perhaps they have an official line in the sand up here at 152. Because I think volatility is the only thing that's missing from them intervening, given the strength of comments we've had recently, particularly from Canada yesterday. So, Kate, you're just back. You've obviously been keeping an eye on this. There's no volatility here, but they've still been jawboning fairly actively.
Yeah, as you say, and as we've been saying it already for a few weeks now, it does seem that they keep an eye on that. So it may be there's a few submarines keeping an eye on things because again, we've gone up there, but we have not touched 152. So there's a few possibilities there. Maybe they're line in the sand. They may be, yeah, ordering the mega banks to sit on top. The other possibility are end of fiscal year exporters lined up with orders there, but I can't keep away from thinking that there must be big barriers up there, and because it's typical for this kind of action that you go a couple of pips or 5 pips away from the level and then shy away again, meaning that there are probably people defending that level. And why I'm saying this is that if it would have been exporters, we may have touched 152, then shy away, but the fact that we have not printed 152 is quite telling, in my opinion. It also makes for it now to be an absolutely big level, because imagine that we're going to that we tackle it and they don't intervene. You can find yourself 200 points higher in the same session. So it is really getting to be a very big level, this one here. And
Yeah.
There must be stops above, but yeah, those barriers, they can make for a very strange price action if ever we get up there.
Yeah, I've not seen barriers trade like this, if they are barriers, that strongly for a long
Oh
while.
yeah,
They're almost trading like the old Panda, the old Chinese
exactly.
PBOC DNTs, aren't they?
But that's exactly what my thinking. I mean, I'm not saying it's China, but there's that makes me think of it. We've been testing it like 3 times lately, and then once before, but then that's already a long time ago. But testing like 3 or 4 times and not breaking means that there's really solid stuff going on there. Otherwise, I mean the funds, whatever some speculative funds, they could have, in my opinion, relatively easily take it out if it wasn't that big. So it must be big what's up there.
Yeah, I mean, it is a big level. It goes all the way back, 1986, all the way back, 1990, and even
Definitely.
you can call that half a test there. But it's a big old level. So, has it become a line for them over the last few decades? It's because it's a funny number. You wouldn't.
It could be
You'd
because
expect the big barriers at
yeah.
big figures, not 152. You'd expect it at 155, 160, 165, 150, that sort of thing.
Yeah,
152
it
is a strange
reminds me.
number.
I mean, if it could be stealth intervention, but then we should, if it's the real thing, we should find it back in the BOJ numbers next month, if they declare it, of course. But it reminds me of them on the other side, because I mean, this is fresh as well in people's minds, because usually we've seen them intervene on the other side of the dollar yen, buying it on the way down, back in the 90s and then the early 2000s. Reminds me of the 105 that they were sitting on at one stage, and we were constantly hammering like 05, 04, 03, but we never traded 105 until they decided to let it go. So it does start to remind me of those days as well. So I'm a bit it's either big barriers or yeah, them having instructed to go and sell dollar yen up there.
Yeah, I think that's a valid point. We maybe need to see what happens after the turn of the fiscal year.
Yeah.
In case it is, exporter offers sitting up there, and those will be done and out the way, and then the market may have a little less resistance up there from a fundamental basis. But anyway, it's going to be good to watch. They're seemingly there's definitely something going on there that we know, so we'll keep an eye on it. Right, moving on to a little bit of data. We had what do we have? We had retail sales out in Australia. There were thereabouts 0.3%, a slight miss over the 0.4%. Still a positive number, so all well and good there. Over at the RBNZ, Governor Orr said he sees signs for more normalised rates on the horizon. Speaking to Radio New Zealand, not really telling us anything that new. We know that central banks are heading in that direction generally. The SNB came out saying that many economic indicators suggest that economic activity was slightly more dynamic in Q1 of this year. So some green shoots poking through the snow-covered mountains over there in Switzerland. SNB's Schlegel said that lower inflation pressure allowed us to lower interest rates. And says they look at the exchange rate closely and intervenes in FX markets when necessary, but there's no set goal for the franc exchange rate. We had comments this morning, late last night, from BOE's Haskell, the other hawk who jumped out of the hike boat and into the neutral boat, said that interest rate cuts should be a long way off. So a bit like Mann, keeping a very hawkish tone despite the shift in policy thinking. Says, although the fall in headline inflation is very good news, it is not informative about what we really care about. And what we really care about is the persistence and the underlying inflation. That's the stickiness he's seeing there. Says he changed his vote because progress on a few key indicators against the bank's most recent forecasts. So indicators coming in better than the bank was forecasting, that changed his vote. But as you can see, a bit like Mann, not going full tilt dove as yet. Over in Germany, things are still looking fine and dandy over there. Retail sales coming in a big negative, down 1.9%, were expected to rise 0.4% year on year, down 2.7%, really looking crap still over in Germany. On the unemployment front, though, not looking all that bad. There was a 4K change in unemployment, so a bit better than expected. Unemployment rate stayed unchanged at 5.9%. So at the moment, this is one area where they're not seeing an outright collapse in employment. So small mercies, one might say. ECB's Panetta in the dovish camp says conditions for policy loosening are nearing. The risks to price stability have fallen, and tight policy is contributing to rapid disinflation. No details on when he thinks a hike should come. Probably going to be looking at the June camp as well, maybe. Fed's Waller, everyone was up and waiting for Wally Waller yesterday, and he had some pretty strong comments. Not you'd know it by the price action we got after it. Dollar yen moved 5 pips, and euro dollar moved, I think, 10, 15 pips, and that was it. And we all went off to bed. He said there's still no rush to cutting rates in the current economy. The Fed may need to maintain the current rate target for longer than expected. Needs to see more inflation progress before supporting a rate cut. Needs at least a couple of months of data to be sure inflation is heading to 2%. Still expects the Fed to cut rates later this year. The economy's strength gives the Fed space to take stock of the economic data. It says data suggests that fewer rate cuts are possible this year. So he's one of the ones who is not looking for 3 cuts. It may be fewer. The economy is growing at a healthy pace despite the progress on inflation. It says recent data has been disappointing, that data has showed mixed messages on the jobs front. Just to make it clear, though, he said the case for hiking rates is very remote. So pretty hawkish comments from Waller, and he had been spiced up a bit by the press for want of nothing else going on yesterday. Hawkish comments, Kate, but as I said, a bit of a dud market-wise, but it seems everyone's jumping on it this morning a bit.
Yeah, although I found, because if I recall well, Waller was always pretty hawkish during the hike cycle, right? Together with another guy, I can't recall who is already gone. I think they were like the 2 big hawks there, and then he changed tack a little bit around the time where Powell as well started to change his wording or his approach around December-ish or so. and now he's going back more onto the hawkish side. I'm starting to wonder if him and Powell are not like playing it a bit together, you know.
Yeah.
Changing a little bit of tone here and there, and now Powell didn't give the market too much over the last FOMC, and then Waller serving as his mate to try and direct things a little bit. But that was slightly more hawkish than we heard from him from his past interventions. That's what I took from it. Well, I mean, we see the dollar stronger this morning. I think there's a lot of end of month and end of quarter stuff going on. So whether it's down to Waller, but at least he did not give the green light to the market to go outright sell dollars on the back of it, right? So there's a bit of support in the dollar coming from that. So yeah, I think he's been a bit of a weather vane over the past 3-4 months, and but he's more like siding back with the more hawkish himself. So yeah, that's what I took away from it. If I can come back just quickly on what happened with the Kiwi and ore. Ore has been gradually changing, right? And yesterday that comment he was speaking on the New Zealand radio somewhere. That comment went completely unnoticed, and then but yet we wake up this morning, and of course the numbers were a bit slower in New Zealand as well. We had those lower business climate numbers, but it does seem that he starts to be a bit less well, that he's like slowly changing. And interestingly enough is that we have an RBNZ meeting on the 10th of April. So just looking ahead a little bit and taking that comment into account, taking the latest data in New Zealand into account, I would not be surprised if there's a bit of more speculation coming that that may somewhere be a bit of a dovish meeting upcoming on the 10th.
Yeah, thanks, mate. Yeah, it could be. Indeed, I don't think there's any. I can't see any expectations at the moment.
I don't think there's much expected for April, at least. I don't think so. But you know, sometimes statements or comments, the press conference, if there is one, I don't even know. I don't think. No, it's not a meeting with expectations or new findings from the RBNZ members. But you know, I mean, it could always be the surprise trade that they come out with some well-placed comments.
Yeah, exactly. Right, just bouncing back to Waller. I've just had a look back over my old notes. 17th of Jan, he was in the 3-cut camp. He's always been a bit Fed should go slowly in cutting rates. And then in February, late February, he said he was again urging patience on rate cuts. No great urgency. Again, seeks at least a couple more months of inflation data. So, yeah, his less cuts comment does make him a bit more hawkish than his prior comments. But he has been leaning that way. But yeah, the case for hiking rates is very remote, obviously. But yeah, these comments, you know, keeping higher for longer, not yet ready to support a rate cut, is definitely in the more hawkish camp amongst the Fed heads, most definitely. But,
we can all be wrong about something at some point, and we will be and have been. But I mean, rate hikes. Apart from a real shock, I mean, what is going to spur them to hike rates again? I think we're in a period where, as I said, unless a very unexpected shock, nobody's going to hike rates anymore, apart from the Bank of Japan.
Yeah, exactly. Right, just a couple other bits and bobs, just to do with employment, jobs, strikes, and whatever. Lufthansa ground crew have reached a wage deal with the German union. There's been still been some big strikes over there in transport, airlines, trains, and whatever. So a deal has been done with those. The rail unions, which up to last month were still striking, have also agreed a deal. That was a few days ago. No more strikes are allowed until 2026. So that might be some inflationary pressure coming into Germany once those wage deals go through and hit the numbers. Over in the US, Ford is going to dramatically cut its hourly workforce. This F-150 Lightning plant in Dearborn. I don't know the numbers involved in that one, but the Ford, as well as all the other US automakers, obviously came out with some big pay hikes, and now they're starting to cut the workforce in that department as well. Also, many senior Amazon employees won't get cash raises this year, so things tight over there at the shipping giant. So yeah, just a few more of these headlines just coming around, potential job cuts and pay cuts and whatever going on there. And anyway, that's it. What I've got. I don't know if you've got anything else. Kay's been a bit dead this week.
There's this new ECB member, Piero Cipollone, who joined. Who spoke yesterday as well. It seems to be the newest guy joining the ECB board. He seems to be a bit of a dove. He says he has warned against an excessive focus on waiting for slower wages before starting to cut interest rates. So that's just perhaps an interesting one to note going forward, that he seems to be a dove, the newest member on the ECB board. He was speaking yesterday. So apart from that, I think you covered everything.
He'll fit right in then, being a dove with that lot over there. We've even got the hawks trying to get in the dove nest at the moment.
Yeah.
But yeah, we'll see how that all plays out at the upcoming ECB meetings.
Yeah.
Right, where shall we start? Sorry, mate.
Yeah, there's this. It's going to be an interesting month in April. I reckon, because we have those. It should be a bit of a nothing burger, as I said, apart from perhaps Japan. But then you have an ECB on the 11th. You have Bank of Canada on the 10th, and then you have RBNZ on the 10th as well. So there may be. I don't know. I think April could be a bit of a surprise month in some respect. Nobody expecting anything, but then you have those four who can actually spice up the month of April a bit.
Yeah, absolutely. And Bank of Japan might be a bit interesting. Obviously, we don't have any hopes of any other policy changes, but I think everyone's going to be looking for forward guidance from these guys now as to what comes next. So that'll be a fairly interesting one. But BOC, RBNZ, and the ECB. I think that will finally rule out any last-minute April expectations there, unless they pull a rabbit out the hat and surprise us all with a rate cut. But I don't think they want to upset the market at that time on that. So we shall see. Right, well, while we're talking ECB, we'll start off with euro dollar, which is making a break. We've had this 108 area that we've been talking about for quite some time. Bit of a zone. Let's go out a bit wider. Let's go out to an hourly. So this 108 area been a definite player over the last few months into late last year. It goes beyond that as well, but here we are, and it's looking like we've got a break on the cards. I did try a little long up here, 108.03, that got put out at 107.80, just near the lows, but it's looking like a bit of a break. As I say, we look at to come back to the shorter time frame week, just seeing we're having a move up here, and now we need to see if we're going to find 108 as resistance. If that is the case, then we may be on for a move to 107.60. I'm going to flick in and out and annoy everybody. 107.60 is my next level, as you can see, prior history at that point. Then it's 107.25, 30-ish, and then it's on to the 107 big figure. Now, I've been just talking about this with one of our roomies, Gavin, Oh, where's all the fibs gone? And I was just looking at this. Boom, boom, boom. Let's have a look at that. Just what's been going on, because, as I said there, this is probably a Elliott Waver's wet dream, this price action, bang, 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 bang. But from my perspective, when I look at trends and when they're breaking down or reversing or whatever, we've hit or just nudged through the 61.8 fib of a lot of these moves. So this move here, we nudged through but couldn't stay below. Then this bounce here, nudged through this 61.8 fib, couldn't hold it, came back down. We're doing the same job here. It looks a little bit more breaky, this move here. The reason why I look at these fibs is that the 61.8 for me is the line in the sand. So when we had this move, we came back down here, we bounced, we kept the trend going, although we couldn't carry it on and break to fresh highs. It kept it in play. This is potentially doing similar. But what this does suggest to me is that we've had a big move, smaller move, smaller move, and maybe we're going to get an even smaller move. That has the effect of a bit of coiling like a spring. So, you know, if it tightens up right in here, that's going to mean that volatility is coming right down again, and we're going to consolidate. But it also means that we're going to lead to a move one way or another that's either going to push to these highs or lows, or potentially even further, because markets don't stay tight for long, as you can see, going back and back and back and back. So it looks like it's coiling, but that's something more for the long term. But in the short term, I want to see where we finish the week. It may be if we finish below 10, this fib, let's call it the fib. If we finish below 108, then we're going to be having another look down here at the lows that we got down here, maybe even more. That will be the next big level, down into that 107, 106.90. If we break that, then there's going to be a lot of input incoming all the way back down here to the 105s. If we hold around here, maybe we close the week off, the holiday period back above 108, then there's every chance that we might get a bounce from that. Where that goes is anyone's guess. But if we see it, you know, only bounce into 109s and then we find resistance, we're again starting to see lower highs coming in, and then maybe we're on for a break lower. So as I say, it looks like it's a bit coiling up for something, but that's not going to be a move that's going to happen in 5 minutes. It's going to be something to look for the months ahead. But if you catch these trends early when it happens, if you trade the levels, watch the things like the fibs, then you can get on those trend moves. But for me, I'm still long from down here at 105s, so I'm just monitoring what I've got. But 107s, that will look awfully tempting to add to those longs as well, and see if we get a bounce there, should we go there. Bit strange, Kay, that this weakness is coming sort of when there's not a lot going on. I mean, euro dollars, it's lucky if it's moved 20 pips a day since this week. What are your thoughts on that?
I think it's a bit the sensitiveness of ECB, perhaps. The doves giving the hawks starting to not turn, but like giving up the too hawkish stance. But then I think it has to do also with just yields. You know, there's still a bit of a differential, which is better for the dollar. Green shoots in Euroland, yeah, but then the situation in the US is not too bad either. Although we had those like yellow or orangey flags coming out in several data points, but not yet something to really panic about. And now we are in end of month, end of quarter. I really want to see where the market is starting to take us in April, right? Because if you look at the overall moves, you look where we started from in October, that 105, and then 104.5, 105. Then we got that spike into the year end. Then we come back onto the 61.8 or so of that move. then a bit of a bounce, and it looks like a quite orderly market trading around a mix of data and seasonalities. And I really love to see what's going to happen in April, especially that, okay, take away RBNZ and Bank of Canada. The ECB is on their own in April for what the euro dollar pair is concerned. So yeah, perhaps the market is we will see actually what's happening there. And you know, overall, the FX vols are still very low, and what we are seeing here is pretty much us making those waves, and then the waves get a bit smaller, and the risk of just starting to stall here until we really will know what the central banks are going to do. And I've been saying, for me, the big decision time, or potentially big decision time, for what's going to happen on pairs like the euro dollar may have to wait until the end of Q2. And in the meantime, we trade the ranges here, and you trade crosses, because the crosses are perhaps more interesting than trading euro dollar.
Unless you're trading euro sterling.
Yeah, I mean, euro sterling is yeah, still a magnet. It was looking like trying to break out a little bit, but here we are back at 85.5. No, it's this. Yeah, it's still, there's still not a lot of difference from the outside. I think if you look at what's happening in Euroland and the UK, we're having trouble to see big differences in the data. And then when euro sterling when higher, then perhaps people are saying like, well, yeah, but the ECB is still turning around 4.25%, and or whatever, and the Bank of England around 5.5%. Then being long euro sterling is costing a little bit of money every day, and here we are back at 85.5. Yeah, it's tough to really see. We need data differences, real differences between the UK and EU, and then I think what's potentially going to break the euro sterling range is likely going to be anything turning around elections also in the UK. But then that means that we will have to wait another few months.
Yeah, exactly. But you're right. There are other things that are moving. I'll leave you to have a look at some of the crosses there. We've got gold. I don't know if Dereju's about this morning. He always likes to keep. There he is. He always likes to keep us on the toes with gold. Oh, no, that's silver. Gold is having this push up still. It's still grinding higher. So we might get a bit of a decision going on here, what it does up here. Are we going to take out this high, or are we going to struggle into it, form a short-term double top, which then would allow for a bit of a pullback? Or are we going to keep going? Derej, let us know your thoughts. What do you think gold's doing? Is it going to keep going, or are we going to make a top up here? Give us your view on that one. Stocks as well. Now, I was pointing this at I feel like Banksy at the moment when I'm doing a stocks chart, doing my S&P chart. I was pointing this out yesterday in our room and in the show. You remember this similar pattern that you get, or that we've got here. This time, this pattern over here, we tested the known support area. This one didn't get down to the test of support. So it's not quite the same pattern, but the definition of it is we've had this move up back towards the highs, couldn't quite get up to those highs. So we're struggling again into it around this 60s area, which could be significant. But we're not dropping back from that move at the moment. So yeah, we're starting to find a bit of support in this zone, but it's still a coin toss from here. If we nick a new high, make a new high, then we're probably off for another leg. Otherwise, if we get a test up here and hold it, then we're going to set up similar to what we've had previous times like this. And then that will give the short something to get their teeth into. Maybe we come down finally and test this support area, and then see what we want to do. If we break this support area, then maybe something is changing, because we failed to do that on any of the significant supports thus far. If we hold it, then there's every chance we're going to break higher and then take off again. Or we could just go sideways in a range for a bit. So there's always multiple options there. But as I said, this pattern looks similar. And when it looks similar, you know how to potentially trade it thereafter. Kay, you all ready to give us a whip round?
Yeah, I can show a few things. I mean, speaking about Banksy, does that look like the kind of a smoking dragon pattern also? His latest piece was actually pretty funny with the tree in front, you know, was quite funny. I just want to come back a second on that gold, because if you look at this gold from November here, well, actually already October into the end of month, beat, okay. November, well, November, second part of the month, beat like hell, okay. December, second part of the month, beat like hell. January, a little bit less obvious, but last part of the month, beat. That's gold, you know. February, then it's went out for a big walk. After once China came back from their new year, but we have seen this same pattern every time in the last 5 months that gold is very bit into month end all the time. So that's another one that when we come back from the Easter weekend, we are going to have going to need to monitor. But all in all, we've seen all those levels, and now in particular this month, 21.5 around, yeah, 21.5, give and take a few dollars for the algos. And I mean, if you're trading stuff like that, you're not going to say like, oh, 2150 goes, this is going down to 2100. No, it can stop at 46 as well. You always have to give a few dollars there. But for as long as 21.5 holds, this looks in for at least a retest. We will see how it goes today, because really today should be the last active trading day, although tomorrow China and Japan are still, Asia is still open, right? Let me see, Australia is closed, Singapore is closed, but like China and Japan are open, so there may still be activity in stuff like gold, etc. Look at 22.20 and above there, another extension around 22.5. But if it's really China and everybody buying it, I would suspect they are not really focusing on a 2.27 Fibonacci extension in gold. They just go there and buy it. And what it also is linked to, in my opinion, is this dollar China, right? Since we've broken above this 722.23 that I was monitoring, we are holding it. Even the setback that we had from last week's speculation about China possibly coming in with a devaluation of the Chinese yuan. They've said as much that they won't do it this week, but in the meantime, we're gradually climbing back up towards the end of the month, towards those levels. But I'd say watch what's happening around 723, 721 now on the dollar China, because for as long as it's big, the market is probably not going to give up this fight against the PBOC. PBOC is at their widest in what is it, 2 years or so? Keeping the fixing CNY fixing stronger than the market, and the market is turning around their 2% band extreme, right? That's in the CNY. Okay, CNH in theory can fluctuate freely in theory, but we know that when it goes too far away, PBOC tends to send out the submarines and try to cap it. But for as long as it holds above here, it looks again oriented there towards the top side. It goes back below 720, then the picture may change again. All right. Yeah, let's look at because I know you're in a little bit of the mix as well. This one, I don't need this. We're down below those support trend lines prior the prior lows as well. it's just a function of the MEX still being in 11% currency, right? There hasn't been anything really world shocking coming out. And I think if you look at equity markets, how they have performed, because the mix is somewhere also linked to what's happening in risk. It's no, to me at least, it's no big surprise that the mix is continuing to trade a bit stronger. Yes, we have bounces of levels, but all in all, it's still hard to fight such a strong currency. I am still in a bit of euro mix, which I sold the other day around here, last week actually. Around here, been managing a bit of it, but for as long as now we are below 1805, I'm going to try and run this. I think there is a possibility to get into 1760s on the Euromix, and why not even down to here, 1740 or so, especially perhaps into the ECB. You know, I wouldn't be surprised if the market at least thinks that ECB could come up with something a little more dovish, especially after what we heard from the real hawks of the ECB. Okay, so I'm a bit cautious on everything euro right now. We're turning around the 61.8 in the euro Swiss of the whole move lower that we saw in 2023. This is what we call the S&B move, right? Where the S&B was buying very actively Swiss franc, and they gave it up towards the end of the year. We did the year-end fixing, and now we are moving back up. We are around the 61.8 of the whole 2023 move. Now, it was a bit of a, I'm not going to say a strange comment about the effects by Schlegel. I didn't really understand whether he was hawkish or dovish there on the Swiss franc, whether we could continue further or not. But I've been saying as well, since we started this whole adventure, and especially in the room, that we have been short Swiss, we have to watch certain levels, and I think we may not be too far. I'm not saying this is an overshoot and it should come down again on all things Swiss franc. I think we could go further, but watch out for certain levels, okay? Because there is a possibility that at some stage Jordan comes out and says like, "Hey guys, don't undo everything we've done in our fight against inflation." So short Swiss, I still believe in it, but maybe not blindly. So I've been reducing some of my positions. I will load them back up if the end of the month brings nothing special in the Swiss franc, but. I'm not saying we have run the course, because I really think we can go back up to this level from where we started 2023, but start to be a little, just a little attentive to what they may be saying. Okay. In the meantime, still looking very bullish. Same thing on the dollar Swiss. Well, on the dollar Swiss, a bit similar. We're coming into we're still well below the start of the year and move. We're still well below, and I do think we can get back up there somewhere in the 92s at one stage. But we again, we need to respect a few levels here. We're coming up to a little bit of a trend line resistance. Then you got another bit of a level just above 91.40, and then 92.5. That's where I think the next decent zone lies in the dollar Swiss. We're trading around two big figures below there. It's still very possible that we get up to there. Okay, still positioned that way as well in the dollar Swiss, and I think I'm going to give it back to you. Yeah, for those having sterling Swiss, still got a little bit running there as well. We're also on a bit of a crossroad here in the 114s. You know. That's what I've been talking about since we started this move, 114s. Okay, next zone will be up in the 115. Anywhere between 115 and 116, we should start to pay a little bit of attention, because we are running into prior tops as well. Okay, so that for the sterling Swiss. And with that, Ryan, I give it back to you, man.
Do you want to grab
Yeah.
oil quickly just for Angela?
Or
Because you've got a fair point, Angela. It's a weird thing. We have seen things that look like monthly flows in oil.
okay, let's quickly look at what happened then in the months prior. Let's say start November. November. Yep, November printed a high at the end of November. December printed a high at around the end of December. January, Angela. Oh, nice spotting there. Really nice spotting because we did the same. And okay, we stretched it out in March. March is a bit of a different month, but it
was
could
a
be,
leap
you
year.
know, huh?
It was a leap year. We can excuse February.
Oh yeah, we've got an excuse. Yeah, very nice spotting. That may indeed have something to do with it. Riding it long? Yeah, why not? What chart? Well, are you going to cover it into the month end then, and quarter end? Your longs, because that may be the play as well. If you start to see it around fixing around the 83. Okay. Yeah, I think here 80 and a quarter, 80 the figure. If it starts to get back below there, then perhaps the party is over for a while. But for as long as it stays above there, we could go higher. We seem to be in a little bit of a channel here as well, up to 85s perhaps, 84 and a half, 85, all possible. 84 and a half is the 61.8 of the September December dump. Okay, 84 and a half. Keep an eye on that one. Yeah, I traded purely intraday. Okay, alrighty. Okay. So that's good. That's good. If you trade it intraday, then watch out what's happening today because the market can be extremely empty tomorrow. I don't even know if oil trades tomorrow. I haven't looked at it yet. Anyway, back over to you, Ryan.
Thank you very much, mate. I'll just go it back quickly. Just to make you aware, we were going to have our big announcement last week on the 20th, but we had to delay that a bit because of some technical issues around the back end. We want to make sure that what we've got coming for you is all working properly and ready to go. So 5th of April, NFP Day. You're registered here, obviously, for the Flow Show. I know a lot of you were already registered for the F.A.C.E show. If you're not registered for the F.A.C.E show, you can do that via the ForexAnalytix website. Be on the show for F.A.C.E next Friday, NFP Day, for our big announcement. You don't want to be missing that. No Flow Show tomorrow or Monday. K-Man and I are going to take a well-deserved mini break. Mind you, K-Man just had the last 3 days off, so I might make him work. But no Flow Show tomorrow and Monday. We will see you. Right, well, we won't see me because I'm off till next Thursday. You'll see K-Man hopefully next Tuesday, Wednesday.
Yeah.
If you are disappearing, this is a good early opportunity in the year to get a little bit of an extra break for these bank holidays. Markets, yeah, they're going to trade. FX is open. We do have US data, the buggers putting PCE on a bank holiday. But there's going to be far less liquidity around. So, you know, we all work hard at this game. So take these little breaks as you can, refresh the old battery, and then we get stuck into the second quarter of 2024. But trade safe.
Yeah.
You might find that markets are not going to move an awful lot. So don't get stuck into a trade that you're going to be forced to watch for hours and end while it does nothing.
And I would say on the other side as well, if you have positions and you see some kind of a funky move in the direction of your position, don't be afraid to take a bit of cash and lock in some of your profits, because it could just be an Easter move, end of month, end of quarter, you know. And there's always next month to start rebuilding whatever you have in position.
Yeah, never look that gift horse in the mouth, particularly over Easter. I've seen it happen often before. Anyway, have a great Easter, bank holiday, whatever it is you're doing this weekend, time off. Thank you for coming to the Flow Show. And